Honestly, David, I feel like this is not the official start of a DAS until you and I are talking on stage up here. So very excited to get into it. Before we get into our topic that we're going to discuss today, just give the audience a little background on you, LMAX Group, LMAX Digital, and what you do in the space.
Hi, I'm David. They let me run LMAX Group. We operate 5 exchanges globally, 4 in foreign exchange. The latest one is LMAX Digital. We operate 3 exchanges in London, 1 in New York, 1 in Tokyo. We launched LMAX Digital 4 years ago. It trades around $2 billion a day. As a group, we trade about $30 billion a day, 34 banks connected, all the major proprietary trading firms in the world, and about 200 brokers. That's us.
Awesome. So I want to start talking about market structure, and that's a theme that you're going to hear touched on many, many times today. But one of the things that most folks know crypto for is this volatility, right? Sometimes a gift, sometimes a curse. And there's a saying in crypto, which is it's not a party until these exchanges go down, right? So, talk to me a little bit. I know you've got a background in FX, right, where a ton of volume gets traded on a daily basis. What is it about the exchange structure right now that makes things go down when there's bouts of volatility?
So, first and foremost, every press article always says all exchanges are down. Incorrect. So, LMAX Group hasn't had a down millisecond in 8 years. LMAX Digital's been going 4 years, hasn't had a down millisecond in that time. So they don't all go down. Now, you hit upon a key point. Exchanges or platforms? What I'd say is the big names out there, the big retail houses you see out there, they're very good, very, very good at sales and marketing. They're very, very good at onboarding. They're very good at what I'd say is sort of horizontal technology, in that you can ask them 100 questions in any second, they can answer it. Can you give me a statement? Can I look at a chart for 100 digital assets? Can I deposit money? Unfortunately, they're not very good at processing trades and orders in a fast market. And that's what you're seeing in one of the most volatile asset classes at the moment, which is crypto. You need to, it's about 2 things, right? It's about prioritization and queuing. You need to prioritize the questions. Now, what's the highest priority? Can I see a chart? Can I see my statement? Or can I get the receipt of my order? Can you stop me out when the market's falling? Right? Will my orders be filled? Prioritize those trading activities first. Do not put them on the same queue as the statement or the chart. So if you like to simplify it, if you're building a low latency trading exchange, you must prioritize everything that's to do with trading and don't build Ticketmaster. If you build Ticketmaster, you're in the queue, you know you're going to get a ticket. You don't really care if it happens in a second or a minute or 5 minutes. Hello, welcome to grown-up institutional trading. Every microsecond counts. So, why is it easy for us? We answer less questions, right? It's the most liquid products out there. You answer simple questions. What do I buy at? What do I sell at? Can you give my trade confirm? We process about somewhere between 7 and 10 billion orders every day in foreign exchange. So the last flash crash, everyone says to me, oh, David, how was your exchange? Have a look, go to my homepage and have a look at my status, right? Not a down millisecond. Digital didn't register. You guys and everyone else out there, probably not you, Michael, wrote, all exchanges are down. Now, of course we weren't down. Our order rate hit about 10,000 orders a second in digital. I process 100,000 orders a second in all my FX exchanges, and those other 4 FX exchanges. So you must focus on that. Frankly, I don't know what they're doing wrong, but they need to up the game in terms of on the retail side of the house, because it's just not up to par today. It's just not institutional grade. Probably if it was, then LMAX Digital wouldn't exist, but we do. And what I'd say to any retail broker out there or anybody who's looking for efficient liquidity and an orderly market, if you want to know where the market really is, you need to be looking at LMAX Digital.
So let's zoom out for a second. I think if you look at over the course of the last 12 years, basically every big business that has been built in crypto thus far has in some way migrated capital from traditional financial markets into crypto, right? Help me understand, like we talk a lot about different institutions participating in this asset class. There's the investment banks, right? There are big macro hedge funds. There are large asset managers, kind of the long-only guys. What are their demands going to be? When they start moving into this space and allocating in a big way, how do you differ from a Coinbase or a Bitstamp or a Kraken? Like, what are the needs going to be?
You got to stop swearing at me, Michael. But look, at the very highest level, I'll give you 2 T's and 2 C's. Trust, technology, credit, compliance, right? That's what they're looking at. Now, what do they want to do? Another list, 4 things. They want to trade it effectively. They want it to be cleared in a risk-free manner. They want to hold it safely and securely, and they want to invest in it, right? So what does that mean? Purely down to the trading side of it, does it work? There's an old thing in technology. What do you try and get to? Does it work? Is it fast? Is it sexy? You never get to the sexy bit, right? You just get to it working. Is it fast? So first of all, technology works. In that, I can trade in all markets. In all markets. An institution doesn't say, hey, David, it's okay, I know you were busy. I got $100, right, wrapped around my neck, but I can't get out of it because you're busy. That's okay. It doesn't work. I see it on Twitter, I got stopped out here. Oh, I didn't get filled. I'm still waiting for my deposit to come through. No, I don't have a business. Institutional exchanges don't have a business. So, does it work? Can I trade in all markets? And then they've got to say, well, how secure are my funds, right? Where is it? Where is your custody? Am I sure about that? How do I know the prices are right? Do you have venue controls? Oh, what does that mean if I go to retail land? Well, it's pretty simple, guys, Do you have circuit breakers? Do you try and operate an orderly market? What does that mean? It's not rocket science's stuff. Do I have volatility bands? Trusted spreads? Is that the right price? Do I have market surveillance tools? Right? All of these things are de rigueur, they're normal in an exchange business. For some reason, we've just skipped over it in retail land. And going back to one of the C's, compliance. I know we all don't want to be compliant, and we want to think, okay, crypto can write its own rules. There's a reason for it. It protects investors. It sets the rules of the game. The biggest institutions in the world want to understand the rules of the game and operate within it. So I think in there's a whole bunch of things, but it comes down to that, compliance, credit, trust, and technology. The biggest blocker at the moment is the C, is the credit, because they're simply not going to send hundreds of millions of dollars or billions of dollars to people they don't trust, haven't got the technology, and aren't compliant. So if any of us in crypto want this to take off and really become the next biggest asset class, we've got to try and answer those 4 questions.
So let's talk about this idea of orderly markets in crypto. And I want to talk about the exchange landscape, and then I want to get to this idea of credit that you mentioned. So if you look at the exchange landscape today, very, very different from how it looks in traditional capital markets. You have many, many different exchanges, and liquidity is kind of fragmented at the exchange level. You don't see many institutional exchanges like LMAX Digital. When you look at the exchange landscape today and what you anticipate it looking like in the next, let's say, 1 to 3 years, what are the biggest differences that you see coming?
Well, hopefully I'll have some competition. That's good, believe it or not, right? There's no point in being the number one if you're 100% of the institutional exchanges. So there'll be more of it. But look, generally it's back to the earlier question. If we want this asset class to grow, it can't just be retail. It can't just be Mr. Musk pumping and dumping, right? Or Mr. Saylor pumping. All right? We need the real money. We need the Blackrocks. We need the Vanguards. We need the largest banks in the world providing that access. And when they provide that market access, they need to trade on reliable, sustainable, institutional-grade infrastructure. As I said to you before, and frankly, LMAX Digital wouldn't be in existence, right, if there wasn't that requirement. So I think that's clear. You're going to see the bigger names come in, and I look forward to them coming in. You've seen a Chicago name recently talking about coming in. The biggest Chicago name offers a 5-day-a-week future. Just for your guide, I know they're here today. That adds 0 to the crypto ecosystems. 5-day-a-week future in a 7-day-a-week market. Great. Thanks for coming. But you're gonna see bigger names come in, and actually that should just be good for all of us, right? It brings competition, and it brings better quality and a better standard of institutional infrastructure and ecosystem.
Absolutely. I want to talk a little bit about, you want to talk about credit quite a bit. Credit intermediation, very, very important part of markets in general. When you say, why is that so important? Why is it lacking from crypto today? What's the impact that having proper access to credit will bring to this space?
The world's built on credit. It's pure and simple. That's it. Look at everything you think you own. Mostly the banks own it, or someone else owns it. You don't, best will in the world, you can't buy everything for cash, unless you are some of the recent crypto billionaires, right? Most people need some leverage. And certainly most of the biggest trading houses in the street need that leverage. They need some credit. So they're good for it. We're talking about multi-billion-dollar futures trading houses, right? Well-regulated institutions. But they trade on every venue on the street. Coming from an FX background, one of my biggest houses said to me, they trade on 52 different outlets. So exchanges like within the LMAX Group and other bilateral lines. That's quite capital intensive. They can't just be moving cash around all the time. And you can't move it around every millisecond. So somebody's got to give you some credit. Because of their balance sheet, they get credit. Who normally provides that credit? The banks. So it's the same when you look at the asset managers and you look at real money. So, the names I mentioned earlier, what you see as institutions right now, the pumpers, they're doing it all for cash. They're doing it all with retail exchanges. They're trusting the balance sheet of those retail exchanges. Sorry, guys, the biggest names in the street, there's $110 trillion of assets under management out there. 110 trillion. Now, we all want 5% of that to come to crypto. That would make it 5 trillion. That would double the value of crypto today. They're not going to send money to some flip exchange in Panama. I said exchange, broker. They're not going to send $1 billion to whatchamacallit in the Bahamas. They're just not going to do it. They cannot come if that's the case. So we need some credit intermediation. We need some balance sheet.
In Hujima Flips and whatchamacallit's defense, I actually heard they're doing big things. So we haven't checked in with those guys in a while. Let me ask you something, as someone who speaks to a lot of these institutions on a very regular basis. On the one hand, I hear what you're saying, right? There's the infrastructure to invest in this space simply doesn't exist yet. When we hosted this event in Dallas, New York, a couple months ago, CEO of WisdomTree gets up and says, look, everyone says institutions are here. They're simply not here yet. Mm-hmm. On the one hand, there is the infrastructure side of things, right, which is just not ready yet for most institutions. On the other hand, in my limited talks with institutions, the buy-in might not exist at that level yet too, right? That's another thing which maybe just takes time and there's still some stigma around this space. If you had to bucket it, what are we waiting for? How much would you allocate to the infrastructure isn't there yet versus the belief isn't there yet, or the buy-in doesn't exist on an institutional level?
Probably neither. Okay, so it's somewhere in the middle. The belief and the know-how is there. So I was in New York, with you a few weeks ago, and I spoke to the biggest US banks. They've all got teams, they've all got a strategy. They're all waiting for Fed approval. That's probably years away for them to touch the physical asset. That's really the blocker. They know how to access the market. Look, of course, I'm going to talk about us a little bit, but they can connect. So they connect to 4 exchanges in FX with me. It's the same market data, it's the same fix feed, it's the same itch feed. They tick a box and they get digital assets, right? So they get Bitcoin dollar, Bitcoin yen. They know how to trade it. And the quant teams have got all the strategies. In fact, they can dust off a lot of their old FX or equity strats and trade it in crypto. I mean, there's ARB there today. Everyone tells me ARB, it's the biggest credit trade in the world. So they know how to trade it. They're just waiting for that approval. Now, what will happen in the meantime, and that's why there's a lot of noise around the NDF space and the future space, is whilst they can't touch the coin, and that's, if you're in the US, there's probably Fed approval, and then there's AML questions there. But they will trade the dollar-settled derivative. Sadly, and there's a lot of noise about the ETFs out there, there's not enough liquidity, especially when you're relying on that 5-day-a-week market in a 7-day market, right? So I think that's where you're going to see them move first. That's the lowest risk for them, to move into the derivative space. But ultimately, the big win, we're just going to have to be patient for it. Efficient derivative markets work on effective, stable cash markets. So when they can touch the cash is when you'll see this explode. And it could be anywhere between 12 and 36 months away.
Okay. So we reached the point in the talk where, let's say, 12 to 36 months away, right? I know you've talked about if pensions or large global allocators were to, just allocate 1% or something like that of the assets that they control. Give folks in the audience a sense of scale. What are we talking about here in terms of growth of the overall asset class, let's say, over those next 12 to 36 months?
I just think it's going to be, I think when you look at the charts, because there's guys out there, I'm sure, that have owned Bitcoin from $1,000. Well done. I think I sold it there. And you sort of look at it now, it's like 9,000, no, it's too high. 16,000 is too high. 60,000 is now too high. Oh my God. I think you'll look back in 5 years' time and look at this. It's just going to be a rounding error on the graph, right? It's going to be bumping along the bottom, just because of the weight of money. And that's not me being a crypto evangelist or a Bitcoin evangelist, just because of the weight of money. So I had a look, very interesting weekend, obviously. So I was reading some custody article, and the top 5 custodians in the world, mostly US banks, controlled something like, I can't even remember what it was, something like $200 trillion of assets globally. And then you go to the biggest name on the street, the listed vehicle in crypto, and they've got 100 billion. It's just nothing, right? It's a drop in the ocean. So I think, look, whatever number you want to choose, imagine you had 5% of that entering crypto. It's a $10 trillion asset class. Today, what is it, 2, 3? 3 if you put in DeFi. You go back to the assets under management, 110, 120 trillion. 5% of that, 5 to 6 trillion. So this, we're just at the very start. And remember, if I can just take you out of crypto for a minute again and look at foreign exchange, this is a retail market today, right? Some institutions, they get a lot of press inches, are entering the space. But in FX, retail accounts for about 8% of the total trading volume. So that means there's, how's your maths today, David? 12.5 times more of the market to come in. So, there's where I think it's going. People talk about the price of Bitcoin. People talk about 250,000, 500,000. I think it's all possible. If that's the winning asset in this asset class, it's entirely possible. But one thing's for sure, the first target should be gold. I think it trades around, its market cap's around 10 trillion. That's the first target for crypto and for Bitcoin. I think within a 3-year time horizon, the value of crypto assets will overtake gold.
Yeah, I think that's, if there are any chart wizards out there, you should look at the charts of gold, what Bitcoin did and what gold did around March 2020 of this year. Not a technical analyst myself, but one more question for you, and then I think we need to wrap up. One, when you think about what's going to drive institutions into this space, right? On the one hand, they could simply be buying Bitcoin with the sense that, hey, this is some sort of hedge against money printing and monetary debasement. Then you also think about some of the yield that's available in this space. We talked about volatility. Obviously, very volatile markets with nascent market structure creates opportunity in terms of arbitrage and yield extraction, that sort of thing. What do you see as being the Trojan horse, so to speak, that really gets institutions moving into this space in a faster way? Is it all of the above? Is it one thing more than other drivers? I mean, what kind of really brings them in? What's the big catalyst?
Depends what type of institution you are. I mean, look, the trading houses, they want to be in now. The non-banks, they're in now because there's massive opportunity. I mean, in many ways, it's a brand new asset class trading at 20-year-old prices, right? Spreads are quoted in basis points. Commission is charged in basis points. Dare I say it, on some of the retail platforms out there, they're paying 0.5%, 1% to trade. So they're here, it's the trading opportunities there for them. I think probably even, I'm not an economist. It is true, we're printing, what is it? What's the stat? We've printed half of the world's dollars in the last...
40% in the last 18 months.
There we go. So I think people don't have to diversify their portfolios, right? We'd all be a bit silly if we weren't looking at this new one. I mean, certainly, I feel a bit poorer every morning. Just leaving your cash in your bank account isn't doing any good. And what do? Buy treasuries, buy gilts? I mean, what actually is the point, right? God help you if you own euros because it decreases in value every day on your bank statement. So I think every sane investor, portfolio manager on the street is saying, okay, I need to have some of my portfolio in that. But going back to an earlier question, Michael, we do need that institutional grade infrastructure. We do need that credit intermediation just so they can invest safely and securely. But one thing I'm very, very confident about is that it is coming. When I go and meet the biggest banks in the world, as I say, I did it a couple of weeks ago in New York, I actually go to talk about foreign exchange. We trade more foreign exchange, everyone, than we trade crypto every day. But when I speak to the head of FIC used to stand for fixed income, currencies and commodities. Now it's got an extra C, fixed income, currency, commodities, and crypto. And actually, I spend about 2 seconds talking about Eurodollar, because that's dull, right? And the rest of the time talking about Bitcoin and wallets and blockchain and DeFi and NFTs. So, one thing's for sure, it is coming. And when you get that tick from your regulator, when you get that tick from your credit institution, I think the growth will be exponential. And you haven't seen anything like the growth or the pump that's coming.
Absolutely. I think that's a good space to end it on. David, thank you very much. Everyone give him a round of applause.
Thanks, mate.